there's going to be a lot of opportunities there in the future as Bitcoin does become more mature, in which people will want to see some of these primitives come online into the Bitcoin world that Ethereum and others have led the way, but inevitable for Bitcoin as well as the most pristine asset that we know in crypto.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
At the core, a Bitcoin treasury company is simple, Jeff Park explains. It's an operating entity that uses Bitcoin as the unit of account. That might sound abstract, but here's what it really means. Instead of measuring success in fiat currency like dollars or euros, these companies operate with the goal of earning more Bitcoin per share as their primary mission. Bitcoin treasury companies aren't just about passively holding BTC on their balance sheets. They're actively engaging in the Bitcoin ecosystem, from mining to structured financial strategies to even newer technologies like zero-knowledge roll-ups and Bitcoin-based stablecoins. These entities provide direct exposure to the Bitcoin economy, not just through buying and holding Bitcoin, but by operating within it.
Bitcoin treasury company is pretty simple. At the core, it is an operating entity that is leveraging Bitcoin as the unit of account to bring value. I think at the core, that is what a Bitcoin treasury company is. There's many ways you can bring value to the Bitcoin ecosystem, but at the core, I think the idea of having your reserve asset being denominated in Bitcoin, where the goal is to acquire and earn more Bitcoin on a per share basis as organically as possible, is the mission. And it's the mandate for which people want exposure to actively and thoughtfully managed Bitcoin exposure, not just at the spot level, but in the ecosystem of opportunities that are possible in the technology behind it. So when I think about Bitcoin, there's the capital B Bitcoin, but there's also other subgraphs of Bitcoin adjacent stablecoins or zero knowledge roll-up opportunities in Bitcoin or Bitcoin mining. All of these things are kind of other operating revenue streams that are associated with Bitcoin that are truly purpose-built Bitcoin native financial institution can actually help navigate a lot of investors to access that historically they haven't been able to. For example, Bitcoin mining is actually the only currently known endogenous way to earn Bitcoin yield, realistically, from what that represents by doing the computational work. But most of us here can't actually access Bitcoin mining revenue directly because it requires scale. So then you may end up buying a Bitcoin miner company out there who is in the business of doing this at an institutional scale. But those companies also have operating level leverage and management discretion as to how they build out those businesses. But it's possible in the future, we may have the ability to extract those opportunities more directly to the investor's base, right? That is a kind of a Bitcoin treasury operation that doesn't really mean asset management. It just means operating within the support of the Bitcoin network. So I think all of these things are incredible opportunities for what Bitcoin treasury companies can be doing, besides the proven path that we have seen Saylor expertly lay out through. Such an incredible privilege and a generational opportunity. When I joined Pomp as the CIO of this entity, I made the joke that internally, in the asset management world, we think of CIO as the chief investment officer. But if you leave asset management, CIO means chief information officer. That's what most people understand it. It's a technology job. But I said that this might be the one job at last where that I might be interchangeable, because in Bitcoin, the investing is the IT and the technology to which there's gains that are generated within it. And in that sense, to be able to build a team from the bottoms up, day one, where everyone is built and joined for that mission, gives you a ton of degrees of freedom to really invest in the right way. At the end of the day, it's not just like a cultural alignment of ensuring that everyone believes in the Bitcoin mission, but it's bringing on a diverse set of talent that actually can be useful, not for just the moment of now, but where we think the industry is going to go 3 to 5 years from now. And that, I think, has been the most incredible privilege. And I'm really optimistic and hopeful that we've done an incredible job in finding the best operators in the most elite way possible that the world has not yet seen. And All it takes is for us to just widen the aperture a little bit more to see beyond what a Bitcoin treasury company can be than the way that we know it exists today.
One of the most powerful parts of Park's thesis revolves around accretive dilution, a term that gets misunderstood. MicroStrategy, under Michael Saylor's leadership, raised capital at effectively 0% interest through convertible bonds, allowing them to acquire Bitcoin with no dilution to NAV. That's a strategic use of accretive dilution, where shareholders actually gain value. But Park draws a sharp line.
Basic narrative today is people like seeing the stock trading at a premium to NAV, and you go out there, you hit the ATM, and you engage in what is called accretive dilution, by the way, which I think is horribly named.
Why? Explain.
So accretive dilution is actually a term that I think got started in the right in understanding that eventually morphed into something else. The very first time accretive dilution was brought to the public dialogue was when the convertible bonds were leveraged to essentially allow a free option for the ability to raise capital for the treasury companies. When you are able to borrow at 0% interest rate, which is what Strategy had been able to do, to then allow the investors, the lenders, to convert into stock at a higher price, that is accretive dilution because there's no ATMs and it's really allowing a forward pool of capital for 0% cost of capital. I mean, that's pretty amazing. Just hitting the ATM by definition is not really accretive if you're increasing the share count by ways that you're actually diluting. So there's a difference here. And the thing that I take to share with everyone is to use the ATM to engage in what people are calling accretive dilution is not a right. That's a privilege. That's the thing you earn by essentially sharing your investors why you deserve to trade at a premium for the exact value of delivering the yield. And only once you've actually been able to deliver that yield do you then have the privilege to hit the ATM to raise more capital. So if your whole foundational story is, oh yeah, there's an arbitrage here and I'm going to just print the ATM to get more stock per share and then I'm going to increase my assets. No. That's a privilege and you have to earn it. And I think the way that we've been thinking about how we're going to do that is we are going to deliver truly endogenous Bitcoin yield where your Bitcoin is actually earning more Bitcoin organically. And some of it come from the financialization of Bitcoin itself, where we know Bitcoin's a very volatile asset, which means we know the options market's very rich. And so if you're able to do some structured trading around it, there are yields to monetize based on that feature. But like I've hinted earlier, Bitcoin itself is part of a larger network. And running the network in itself is the long-term mission of what all Bitcoiners want to see its success rooted in, which is to essentially generate more fees in the network beyond just the mining for additional blocks. And I think in that sense, there's going to be a lot of opportunities there in the future as Bitcoin does become more mature, in which people will want to see some of these primitives come online into the Bitcoin world that Ethereum and others have led the way, but inevitable for Bitcoin as well as the most pristine asset that we know in crypto. MicroStrategy is an incredible company because it is the first of its kind and has shown that there's ways to segment Bitcoin risk across customer base for which there's a whole diverse array of participants that want Bitcoin adjacent risk. So we know the capital structure today, where of course you have the common equity, the company's worth about $100 billion or so. You have convertible bonds at the very top, and then at the layer below, there's this tranche that is rather exotic called preferred equities. Preferred equities, historically, I would call the armpit of like American securities because nobody likes it. Like institutions don't really like it and retail investors don't like it. But Strategy has made it a cool thing, and there's 4 of them. There's 4 preferred share classes, and they all have slightly different features. Most of them are all perpetual, except one is convertible. They have different coupon rates. They have different subordination. And because of that, the price it trades ranges from 115 on one note, which is STRF. And then there's another that trades in the 80s, in the low 80s. Actually, at one point it was in the high 70s, STRD. That's a 30 point gap of preferred equities. So this is the insight that I'm going to share. In a bankruptcy, the liquidation waterfall is fairly clear. You have your administrative claims that come first, then you have your senior secured creditors, and then you have your debt investors, and then all the way at the very bottom is your equity, which usually gets crammed. preferred equity is equity. Preferred equity is not bonds. Preferred equity is not credit. It will be treated in the lowest denomination of its class in the event of a bankruptcy. I'm not saying there's going to be a bankruptcy, but because there's this notion that the bells and whistles of these preferreds offer different outcomes, because there is some rank order effect as to some appearing a little bit more secure than others, the market has decided that there's a 30-point spread. I'm telling you, in a terminal value perspective, it doesn't really matter. They're all going to be shared in the same bankruptcy class. So then what you can really think about is, well, why do you buy preferred today anyway? You're buying it because of the yield. You want to get paid cash now for owning MicroStrategy risk. And so the most compelling security that I see today is STRD, which is trading at $80 and is earning you double-digit coupon and is actually going to have its ex-date this coming Monday. And this is the second thing that I'll share with you guys. Usually when a stock goes ex-dividend, the stock price goes down by the dividend amount, right? Otherwise, there would be an arbitrage. So you would actually just box the trade and make free money. The market, of course, won't allow it. So it drops by the ex-dividend amount. Well, here's the funny thing about these preferreds. Because it's actually driven by retail and there isn't much institutional participation, almost always the preferreds do not drop by the amount of the dividend. And you could have seen it pass in June, where they would pay your coupon in cash and it wouldn't drop at all, or it would drop a little bit. And so what I would share now is there's an ex-dividend coming up for STRD and some other ones as well. It's next Monday. It's $2.50. If the thing drops by $2.50, I mean, it's break even, but there's a genuinely good chance it will not drop. And that's just yield that you just got on a principal notional for which you can still hope for a pull to par and make 20 points later up front. So that's the trade.
The aperture of what a Bitcoin treasury company can be is just beginning to widen, says Park. What MicroStrategy started, others are beginning to refine. The future isn't just about holding Bitcoin. It's about operating in the Bitcoin native economy. Mining, volatility-based yield, network development, and direct participation in the capital structure of this emerging ecosystem. Jeff Park's insights cut through the hype. He's showing us a path forward where financial institutions don't just invest in Bitcoin, they operate in Bitcoin.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.